First flight of the orbital Discovery, and the shuttle has cleared the tower. Discovery's core computers now have primary control of critical vehicle functions.
and then this one at 10 o'clock that we usually always have. So we do have that coming along. Hold on. I do not have podcast sound. One sec, guys. There we go. Okay. So again, for the YouTube people, I'm so sorry. We are going to be doing 2-a-days, Monday through Friday. Not starting this week, but next week, so that we can cover more stuff. So we have more time for GME spaces, and we have more time for AMC spaces, crypto, NFTs, everything. So there's so much just to talk about, and everyone kind of passes out at about midnight my time on Eastern time. So that way we can also get the friends that we have over in the other side of the world, in Europe and whatnot. So yeah, we are going to be busy. So I look forward to that, and I'm trying to do it during market hours, maybe, so like around that 2 to 4 o'clock time frame. So that, if there is anything cool that's happening at the end of the trading day, we can kind of watch that and be together for it. And you know what? If we're all together for the MOAS, that would be even more epic to get that, completely just documented and everything. So I think that'd be really fun. So that is the big announcement. But today we are talking about GameStop, bringing it back, going to back to at least the February timeframe. And I mean, there's just so much to cover. I mean, if you've been here since January, February, or even before, you know how much information we've learned since then. Just the corruption and exposing all of that, learning what naked shorts are and how they use dark pools and the flow of money and how everybody's kind of intertwined and whatnot. So I will be bringing people up. If you guys have your favorite DD posts that you've ever had that you think will help investors that have just gotten into the market with GameStop or are thinking about getting into GameStop, so that they can kind of embrace what we have experienced, because it's just a wealth of information. And when you've gone over some of it so long, you kind of forget. It's like in your subconscious at this point. It's just, it, but you forget that other people might not know it. So um, yeah, we'll dive in. I did tweet out that since we cannot cover all of the information, I mean, it's a ton, right? I did tweet out a fun little thing to go look at DFVs. He's been tracking this for over 2 years now, and he was right. And I'm really sad that I didn't see this sooner. But the fact that he was ridiculed and everything like that, that's just, I mean, that has to feel good for him. That time when you actually call something and you're dead on the money, right? So check out his stuff, his videos and everything. But if you want the more recent stuff, what the ape community has really embraced and been doing, and I mean, we're talking, when they say dumb money, and the fact that we had I can't remember which news outlet said, they're no longer dumb money. Like, these people are doing more work and understanding it more than people that are paid to do this. So we're no longer dumb money. That idea has to be gone. It's completely obliterated, because when you see just the archive of information, I put it in the nest up above for YouTube. It is a pinned tweet. If you want to check out the links, it's a wealth of information. So that is what I'm going to start with. Just one post in particular, and then I want to bring everybody up, because I could talk about this way too long, because this is what I studied for days before I even jumped into it. Was just reading everybody's stuff, but this one I was already in. But this kind of solidified my grasp on it. And this was a post by user BC Ripster, and it was like the title is "Follow the Crumbs. GME exposed the meta," and it talks about how connected everything was, and how the SEC was kind of overlooking everything and didn't really pay attention to it. And talking about what needed to happen. So there's a section in here that says the WSB play. This is basically the original Wall Street Bets plan from back in October. Don't worry about the plan. We know what's going on here already. Melvin Capital shorted by 140%, which is more than the float. GameStop had enough cash to cover debt, so it seemed unlikely that they would fail unless the hedge fund forced it to. Squeeze looked obvious when you lay it out this way. But there was one chart here that was super important that folks were trying to figure out. And then there's a link. I'm not, you guys come follow this one. But there was a section down here at the very, very bottom. And it was really just, let's see. If you look at the volume of Wall Street bets had brought since then, meaning back in, I think it was like earlier October, and the amount held in options and the amount of shares that had been borrowed against the last week or two as hedge funds have placed a second set of shorts, well, it sure looks like there were way more shares on the market than existed. Of course, without having record from the clearinghouses, AFAIK, there's no way to know for sure. Only the SEC would do that. I don't mean the bet Wall Street played. That Marvin had 140% of the float. I mean that Vanguard, Fidelity, and BlackRock have sold more than the total shares that exist. That's a completely different problem, and it's punishable by jail time, not a joke. And he's right. It's basically counterfeit stock shares. Although, and that so to remind you guys, this was kind of the birth of us of the main ape community really looking into the synthetic shares and just the manipulation and how this was working. So this was kind of where I started looking into the ETFs. This is when I really wanted to start looking into that aspect of everything, and like how were they getting away with this? How were they doing it? So this really kind of captures that idea. If this is true, who knows how many other times they've done this, or maybe it's not true. And this was before we actually figured out about Toys R Us, so that's a good point too. Or maybe it's not true and they just really like the stock. If BlackRock started buying 5 days ago, and the longest they can likely do this is 21 days, then the doomsday clock doesn't run out until at least February 17th. And that, keep that in mind. So February 17th, and we're in September now, right? They've been kicking this can so far down the road, it's ridiculous. If Wall Street can get Wall Street bets to sell before then they won't get caught and won't go to jail. But if they don't, well, this will make Enron look like chump change. If you guys remember Enron, right? If enough people hold until the end of February, and this is truly the situation, then there is a chance that major parts of Wall Street are starting to go to implode. The conclusion: apes need diamond hands until the end of February in order to get the SEC involved. Okay, SEC, and this is a reminder, guys. SEC didn't really start doing anything until like March. It was maybe late March that SEC finally started doing stuff and trying to get some kind of regulations and new rules and stuff. So the OG that posted this, he's pretty dead on. Let's see, where was I? Most likely somewhere between February 17th, February 19th. Whether or not this will happen is anybody's guess. But if it does, all heck may break loose. And then you guys saw Archegos. Granted, that wasn't a GME play, but Archegos started having problems, and we're starting to see other hedge funds have problems. And Melvin Capital had to have a handout from Citadel and Point 72. Like, we started seeing this, which was amazing. Wall Street will probably do everything in their power to prevent that. There are too many top players involved. Crazy moves are likely because stockbrokers are smushy and jail is uncomfortable. This may affect the market. Bloomberg may be correct, but not at all for the reasons stated. But that said, I wouldn't panic if it does. I think it'll be fine in the long run, but that's a whole other set of reasoning for another day. So it's I just remember, and this is a long post, that's why I wasn't going to read it all. It talks about, the 2008 crash and the SEC theory that made a lot of this illegal for like the over shorting and synthetic shares and everything. So this one particular DD was amazing to have in the early days of this year. Granted, like I said, DFE and a lot of the Wall Street Bets people that didn't ridicule them kind of saw this, but to have more people grasping on and understanding what's going on and kind of putting it out there for others to understand was just amazing. It was a phenomenal day to start reading more people wanting to track down what was going on in the stock market. So with that said, if anybody has DD that they want to bring up and talk about, I'm opening the mic up to anybody that wants to come talk. Other than that, yeah, no, GameStop. A big reason we're doing this call, this podcast, is to we have earnings coming up this week, so that should be interesting, and I think it's going to be good. I've seen a lot of people tweeting out that they're buying stuff, they're going to GameStop, they're putting in orders online if they can't actually go, and different theories and perspectives that we have going forward is there's a lot of different things going for GameStop at the very moment. Lady, do you have something? I know you've been with me through all of this. What's been your favorite piece of GME?
Oh, sorry. Just I think going back and looking at what deep fucking value, like what he was putting out, and I think that was probably the start for me. And then a lot of actually, I have to say, just kind of coming to Twitter and finding new people to kind of um like just share what they've been looking through, and meeting new people that way, I think has been pretty monumental for me. So let me see. Hold on. I do have a couple requests. Bath, you're not going to be one of them. Sorry. Um,
I don't know where Chase went. Chase
Chase,
disappeared on us.
no, wait, he's connecting. So,
Oh, he just disappeared from me.
oh no. Oh, there he goes again. Let's see. Bath, you're not getting it. I'm sorry. You're just not going to say anything. You have nothing to say. You're literally a chair.
Oh, hello.
Hi, Chase.
Hey, Chase.
Oh, hey guys. Thanks for having this podcast. I just wanted to share. I made a purchase from GameStop, a couple of their large squeezable bananas, and the I did. It was took about 4 days for it to arrive to my place, but it did come from the new warehouse in York, Pennsylvania. So I thought that was great that the distribution center in York, Pennsylvania is actually up and running and start shipping merchandise out.
Wait, okay, say that one more time. They're shipping. I was trying to do too many things. I apologize. Who's
Oh,
shipping out merchandise?
yeah, because Ryan acquired the new distribution center in York, Pennsylvania. So I received my order, and it came from that warehouse. So because I thought the warehouse was going to go live later on in 2021, I didn't realize that it was actually up and running. So I thought that was a good
that
thing.
is that is amazing. That is, I mean, you'll get faster shipping. That's for damn sure.
Yeah. I
I
mean, I just
mean,
put an order for two of the large 16-inch bananas, and then when I got it, I looked at the shipping address, and it was from the York, Pennsylvania facility. So that was great.
thank you for that. That's phenomenal news. That is phenomenal.
Yeah.
Penny Lane, how are you? Is she there? She might.
Oh, I'm here. I know I'm here. I didn't even realize I was a speaker. Hi everybody. Um, my
What
dog
is?
does not smell like a skunk anymore. That's the only news I have.
That's the only news you have. That's
That's
good.
the
That's
only
good.
news I have. Yeah.
Penny, what would you say would be your favorite thing, or what got you into GameStop?
That is a really that's a oh man, that's a hard question to answer, but I think just the entire movement of um fixing the system. I'm not sure. I don't know if it's what got me here, but I think it's what kept me here. I'm not sure if that.
No, that's fair. That's fair. So, how did you hear about GameStop? Do you remember?
I I was learning. I was teaching myself for months and months and months about like how to play the stock market and like watching YouTube videos and taking notes. I would love to send you pictures of the notebook that I have from that. And then oh God, I was on Reddit and I stumbled into Wall Street Bets before it turned into what it became. And so I was like, okay, so I'll get some GameStop. And I tried explaining the situation to some people that I knew, and they're like, you clearly don't know what you're doing on the stock market. I don't know. It was it was a bit of a mess for me and conflicting in ways, I guess, because I felt like I was stupid and didn't know what I was doing. Um, but yeah, I don't know. Honestly, I don't even know how I landed here, but I'm happy that I did.
That's pretty awesome. I think that's a lot of people though, really. Like, um, gosh, I remember, I've been a part of a few different communities, and whether, whatever meme stock they got into, they don't remember exactly how they got into it or how they heard about it. They just know they're here and they're holding, and that's about it. But I mean, as long as, I can at least, I'm sure you can say yes to this. Have you learned a lot throughout all of these last, gosh, 9 months being in?
I'm shocked that it's been 9 months since like a lot of people got in January, but the GameStop thing started in August 2020, right? I don't think the people starting holding in August thought it would be over a year before all of the things came into fruition.
Yeah, I would say so too. Hey, Sue, I see your hand up. What's going on?
Hi, yes. I wanted to answer that question of how I got started with GameStop. I've been using technical analysis and looking at the charts for quite some time, and I've noticed that in January, that when it spiked and went to $483 and then it dropped back down, and I noticed the same thing was happening with AMC, COS, Naked, Blackberry, Bed Bath and Beyond, Fubo, and a lot of other stocks were mimicking the same pattern on the chart. And it dawned on me that it looked very strange for all of them to move in sync. And so I Googled it, I was looking at what other people had to say about it, and it kind of led into the rabbit hole of Reddit. And once I started reading what other people were saying about the manipulation, the algorithms, and how these prices, which didn't trade in sync prior in 2020, but in 2021, in January, it started trading in sync. And so that was one of the things that got me involved. And then when Roaring Kitty went up for the congressional hearing and it was all over the news, and when I found out that they stopped the buy button, that was, to me, it didn't pass the sniff test. Something was not right. And when I kind of put together the the these quote unquote meme stocks were following the same patterns on the charts, combined the, with Robinhood stopping the buy button, it didn't sit well with me. And that's what really catapulted me into researching. And thank gosh for the apes on Reddit and on Twitter who could explore this. And when I saw Wes Christian, the attorney, and Dr. Trimbat, I saw their videos and interviews with Autobit. They kind of explained a lot more that the charts alone and that the congressional hearing didn't. And that's kind of what set it off for me, that the sniff tests that it didn't pass the sniff test, and it was verified by Dr. Trimbat, who's been fighting this for 20 years, and Wes Christian, the attorney, who's been also fighting this for decades. So in conclusion, those those factors and that information kind of fed my passion to find out what was going on.
Yeah, that's big. I know that happened for a lot of people, like the congressional hearings and everything. The buy button, that was such a mess that day. Like oh my gosh, I actually watched that happen. I wasn't in it yet. I was not in it yet. Because like I said, guys, I got in on the way down. I got into GameStop on the way down. That's how much conviction I'd read, 3-4 days straight about what was going on with the whole situation. And so that's how much conviction I had. I was like, oh, I didn't miss it. There wasn't anything that I missed. This is still going. So that is great to hear that. I mean, that just built up the fight for it. Thank you for sharing that, Sue. I appreciate that.
Thanks.
Chef, what was your moment?
Well, I didn't have anything particular really, but I mean, I'll add on to what Sue just said. I mean, I think that was a really good story, and I mean that's part of it for me is that, I mean, I shared the other day that I got in a little bit late, after January and after a lot had happened, but I'd been on Reddit for a long time, and that's really where I started with all of it. I didn't get on Twitter until recently, and it was specifically to follow a lot of this stuff. But yeah, I mean, I had just been kind of adjacent to the market a while, but not a big participant. But just looking into all of the DD around what happened. The House Financial Services Committee, as Sue mentioned, just a lot of what you read there, and when you read it and you go look at the regulations. I mean, because I'm pretty skeptical when it comes to a lot of things. I mean, there's a lot of fantastic stuff out on Reddit, a lot of fantastic stuff out on Twitter, but there's also a lot of garbage. And so I'll take it back and read Reg Show and read some of the regulations that they're changing, whether it's like the DTCC, NSCC, the options clearing one. I don't know. I mean, Charlie's all over that kind of stuff, and he puts up videos all the time on that. But it's just looking at kind of the scale of what happened and what continues to happen. The way that the regulations are being changed around it. And I mean, there was some interesting stuff today that we may get into with, some of those dead companies that it turns out RC was tweeting about for a long time. And I don't know that we all got the message, but yeah, I mean, I feel like for me, I mean, it's a combination of what a lot of people said. I mean, it certainly has a draw. There's like an energy of the community in general, but I mean, I think for me, if I had to bring it back to one thing, it was just kind of recognizing what happened, looking into what happened, and definitely, sniffing out that there is some serious fuckery about.
Yeah, for sure. I mean, that Wall Street's corrupt. You know that. We all know how, most of us were old enough to remember '08 and just kind of the BS that's happened. And if you weren't old enough to remember, I'm sure almost all of us have watched, Wolf on Wall Street or The Big Short or anything like that. Like a lot of us have, at least watched those movies or The Wall Street Conspiracy. And if you haven't watched these yet, go watch them. Yes, they are movies, but there are actual like real information within these movies that actually happened. So if you haven't, I highly recommend it.
Yeah, another one along those lines that I'll plug real quick is The Inside Job.
Yes, that one
And
too.
that's
I
like
knew I was missing one.
Yeah, I mean that's like 2008 Crisis. But I mean, I'll just tell you. I mean, I watched that one probably 4 or 5 times over the course of 2 weeks, and just the first time I watched it, I mean, my blood was boiling. I mean, because it's a straight up documentary. they got a lot of interviews, which they probably would not have gotten if they knew exactly what was going to be asked and the way the interviewer was going to go through with it. But I mean, it's certainly relevant to what's going on because and there's a lot of things historically that are relevant to what's going on, and I know Kenna, you can speak to that way better than I can. But I mean, this one is essentially it's an early 2010s like documentary of the housing crisis. But for anybody out here that hasn't seen it, it's definitely a good watch, and it'll piss you off. I'm almost sure of it.
I mean, almost anything from those eras is going to make anyone that actually now understand what's going on. It's just going to make you so mad. It really is. And that's what, it creates that drive that we have to try to make change, make it an actual fair and free market, because it shouldn't just be for, a select few that can actually make it in the stock market. Sue and Chase, I do see your hands up, and Penny, I do, but I'm going to get to Diamond Ape real quick. Diamond Ape, what's going on? Is Diamond Ape there? I don't think so. We'll get back to him. Gary, yes, and then I saw you come up. I did see you guys, and I'm gonna start kind of popping people down so more people can come up. So Diamond Ape, if you can hear me, please request again.
Oh, can you guys hear me?
Oh, yes.
Oh, so what got me into GameStop was free money, right? Like, anytime you see a short interest above 100%, which we've never seen before, it says free money because shorting is just like, you can think of it as like obligate buyers, and we see that someone needs to buy like more than the supply. It just says free money. It's like you're leaving money on the table if you can see it, and then not jump on GameStop, I guess, like in January. And just to add on to what Sue was saying with the sniff test, the fact that Um, at one point the price was 483. The short interest was above 100%, and price and short interest can't both decrease. Those are like inverse, right? Like if shorts are defined as the amount of shorts divided by the supply, or short interest of float would be like the amount of short interest or the amount of shorts divided by the float, and both were above 100. Like the short interest was 140%, short interest of float was 226%. The fact that both went to like 17% and the price went to 40, it didn't even make sense that they covered. Like, so that sniff test for me was like, oh, it's like hurting them. Like that's just made it more confident, I guess, to buy when it's low. And just to like ask, or I guess like continue the conversation about what my name was talking about, like with the dead zombie stocks. Did you guys read the new DD on that? Like that's pretty crazy. Of where it's like
Yeah.
yeah, and the fact that we saw it before January 2 and we're seeing it today, it's like, oh, my tits are jacked.
Well, and to point out that too, so using like zombie stocks and things to gain liquidity, like we've seen it with crypto. They've done it a few different ways, where they've pumped up um, regular cryptos, Bitcoin, Ethereum, and stuff. We've seen those pump and dumps, but they've also, there was a crypto that they did from like 8 cents to 10,000. So it's just trying to gain liquidity. So I mean, at least they're trying. I guess we can say that. But just stay alert and stay aware of what's going on. Because the first one that pops into my head is Rocket, RKT. That is with what happened this past week with like Blockbuster and
It's like Sears.
yep. Yeah, Sears. Those two. Like it just reminded me of RKT too much, and I was like, wait, I and then it was weird because a simulation thing happened because like me and Penny Queen had just been talking about Blockbuster. Like, hey, what do you think about this? It's just like a penny stock to flip, right? Because it usually only fluctuates like a fraction of a penny, so you can sit there and pump and not pump, but trade it pretty quick with a large amount, so you can actually make something. But the fact that we just talked about it like a week prior, and then they used that one, I was like, wait, okay, the Matrix needs to stop listening now because that's weird. But no, yeah, there's too many. There's no such thing as coincidence anymore, for sure. Sue, yes.
Hi, yes. Who was it that what was watching the Inside Job 4 times and then his blood was boiling?
That's me, Chef.
Oh, oh, Jeff. Jeff.
Chef.
Yeah,
Oh,
Chef,
Chef.
Chef.
Jeff,
Hi,
either one. Yeah,
hi, Chef. Sorry, Chef,
makes
but this will get your blood boiling. And I brought it up last night. This is what Ken Griffin said in 2017 in an interview on MSNBC, and I quote: "There are many dynamics of how humans behave that can be taken advantage of by technology. If we know how humans behave and we can predict that, we can use that to better position our portfolios. Quantitative strategies rely upon human biases and behavior to be successful. We will use computers in new and innovative ways to better drive the prices of assets in financial markets." That was Ken Griffin talking about quant strategies and what Citadel uses. He also mentioned that he piggybacked off of the work of Nobel Peace Prize winners, as well in economics, as well as psychologists, to form his way of taking advantage of the retail.
yeah. No, I mean yeah, I'm familiar with that one. I mean, I've seen it many many times. Yeah, I mean, it's one of those things. I mean, it kind of goes to show. I mean, they have these teams of psychologists, and I mean they've got very sophisticated algorithms that are playing off of psychology. But I guess when I think about that, that's what is so great about the old simple buy and hold strategy. Um, it's somehow in all their psychological study and algorithmic development, they didn't quite account for this, but um, and that's another thing as to why this could continue to take a while. I mean, we never really know like when it's going to happen, and that's why we can hype dates. I mean, we can get excited about dates, maybe not super publicly, but it's just one of those things. I mean, this could take a while. I mean, they're paying a cost to borrow. It doesn't cost us much to buy and hold. I mean, outside of obviously tying up the capital, but yeah, it's it's definitely it surely seems to be a rigged game, and if nothing else, it's an uphill battle.
And so this actually brings me to my next DD that I've been sitting here trying to remember where it was. This was back in March, posted by I Hated My Boss. And you want to talk about a rigged game, and we've seen these a few times, right? This stupidity, and I understand that journalists they'll it's kind of like the newspaper with like the Super Bowl, right? They have a publication of each team that's going to win, like Tampa Bay versus I don't know New England or whatever. Like, and they have both publications saying both teams won, right? And then they only release the one that actually happened. But that's a Super Bowl, right? That's an inevitable thing, right? One of those teams is going to win. And so, but what we saw and what we're still seeing are these articles that are dated and time stamped before events actually happen. Like there was this one that was like GameStop was flying and flying. Like I said, this was back in March, and there was a article published at 12:41 p.m. The day it was flying, and it was still going up, and it says GameStop drops 40% in 25 minutes. Hi, I mean that's kind of way too specific of a headline to post before the event actually happens. So there is just one of these funny little, like you said, it's rigged and people are calling it out. I don't understand it because there's no way you can type up an article this fast when it just happens, right? So kind of a funny thing to be seeing. Let me see. Chase, I think you were up.
Oh yeah, hi. I kind of wanted to talk about the uh, upcoming earnings on Wednesday. Kind of put out my thought. I was, kind of looking back with the prior two earnings. Um, and then so the first one back in um, March, and then April, GameStop issued 3.5 million shares to raise capital, which affected I believe it had a negative impact on the price. So GameStop after, hit a low of $132. Uh, and then the second time we ran up to 350, um, that was on June 9th. GameStop issued 5 million shares, so that negatively affected the price. But interestingly, the price made a higher low at 145.22. So the first share offering, GameStop had weakness and it bottomed at 132. And the second offering, which was a larger share amount at 5 million versus 2.5 million, the price had experienced weakness, but it put in a higher low. So I was thinking, kind of like how institutions, they kind of use this strategy where they dump supply onto the market to kind of test to see where the stock will bottom out at. So I look at it positively that on the first offering, the stock went to 132, but on the second larger offering, the stock bottomed at 145.22. So that data point tells me that despite a larger uh, amount of shares offered, the stock held up very well in light of that. And in combination with the ongoing, manipulation of the shorts to suppress the price, GameStop really held its ground. And I'm kind of thinking about the upcoming earnings report on Wednesday. I was thinking Ryan might not need to issue more shares because the first round he used the capital to pay off the debt to basically take bankruptcy off the table and pretty much kind of checkmate the shorts. And then the second offering was to strengthen the balance sheet. He added over $1 billion cash to the GameStop treasury. So he's accomplished two great things, albeit temporarily. When you're living in that sell-off or whatever, it felt bad. But when I look back, I'm like, wow, those are actually good moves that Ryan did. So with this upcoming with this upcoming earnings report, there's some speculation, or understandably, there's, oh gosh, we're going to go down again. They did it twice before. Just expect a dip. I'm not going to exclude that to expect weakness with the earnings report because the hedge funds, they always like to use an earnings report as an opportunity to drop the price. But at the same time, I don't see why Ryan wouldn't or GameStop would need to issue more shares when they've got enough money in the bank to fund operations for the foreseeable future. They have really no large debt outstanding. So GameStop is in a really good position where I don't think a share offering would be necessary. So I think that would be positive for the stock price. But that's just kind of my thought. Thanks.
Yeah. No, I mean, I agree with a lot of what you said there, and I'm an accountant by trade, so I'm definitely going to take like a deep dive into into the queue once it comes out. But I mean, I do think both of the share offerings really strengthen the company. You did a good job of kind of outlining why. I guess one of the things I just kind of made a note I want to look into is to see if they have like an outstanding shelf registration or anything like that, like as it relates to their outstanding shares. But I mean, when I think about the quarter and the earnings, I expect it to be good, but I would also like just encourage everybody to look a little bit deeper, right? Like the biggest things people focus on when an earnings report comes out are top line revenue and, net income or earnings per share. But there's a lot in between there. And some of it's, real and some of it's not, I guess from an accounting perspective, right? Like when you think about like impairment of intangible assets or like there's a lot of like non-cash expenses and a lot of things that can, benefit or hurt, income in a given quarter. And so I'm definitely going to dive, pretty deep into that. But just when I think about and when I see the amount of people that have been buying from GameStop recently, I mean, I know that I have, and I mean, I shared this the other night, but you know, I had shopped at GameStop when I was younger and stuff like that. But I mean, I'm unfortunately was one of the people that you know, I probably, if I was spending money on gaming, it was probably like on Steam or, you know, some other, you know, type platform. Whereas now, like if I'm going to spend money on Steam, then I'm going to go buy a gift card from GameStop, and then I'm going to use that gift card on Steam to, you know, buy those games. Um, the other part of that too is like the extended console cycle, because like the PS5, for example, has been out for a long time, but there's so many people that want them that still can't get them. And that's usually like a Q4 kind of holiday, you know, phenomena. But I still don't think it's fully played itself out yet. And you can see kind of if you follow like the company and their marketing, you know, there's a lot of the Power Plus rewards members, and you know, they get the first dibs on any of the PS5s that drop, and they seem to sell out fairly quickly. So, I mean, I'm expecting a good top line number for sure. And if the bottom line number isn't spectacular, again, I would just encourage everybody to not react too quickly and kind of look in between a little bit to understand like why that might be.
Yeah, I always advise, like, you know, earnings calls are earnings calls. Like, I don't put too much weight into them in this particular situation, because the minute we even get hyped for these kinds of things, like, this is why we don't hype dates. We don't expect dates. We don't talk about dates in that sense, because, you know, the minute we start doing that, they are like, oh, hey, the apes are excited for this. Guess what? We're going to go and pretty much destroy all their hopes, and which that doesn't happen. We just buy more, right? It goes down, we buy more. It goes up, we buy more. It doesn't matter. But I just don't, you know, the people that are just getting into this and haven't really been through something like that, you know, where people are excited for a date and it doesn't come to fruition, just relax. We've seen it a million times at this point. We tried doing dates in the beginning, it didn't work. So we just stopped doing it. We were just like, you know what? These are things that are coming up, things that, you know, as an investor, you should probably listen to, you know, because you are investing into a company, and you kind of need to know what's going on within that company. But other than that, just sit and let it ride at this point. Brian, I'm going to get to you, and then Penny, I will get to you next. Oh.
All right. Thanks. Appreciate it. To answer the question du jour, I've been lurking on Wall Street Bets for quite a while, and then got into GME in early January from Rod Alsman's posts and GME.com, GMEDD.com, and Jeff Amazon X and those guys. I just want to say, this is a good segue from the previous conversation, that I've put a lot of thoughts into the manipulation of digital online human social networking that we're seeing online right now. And I think that we're approaching a very critical time for that this week, especially with the earnings call coming up. My background is in the use of information for the purpose of influence. What I do is basically what the shills and bots do to us on Reddit and Twitter. So to have this shit done against me pisses us off, or pisses me off that I don't have an opportunity to control the narrative against it. But like this last week, there's been an uptick in, I guess what I'll call digital maneuvers that include increased like negative sentiment and more tying traditional mainstream media articles and opposition press releases to what's going on, as well as more destructive maneuvers to attack, you know, like social network or structures and stuff like that, kind of infighting as the uncertainty of earnings comes around. So that propaganda that's entering, you know, increasing of fear and uncertainty towards earnings and what might happen after. I'm seeing a large increase in. I think some of us saw the article about. I think it was from. Oh shit, what was that? Seeking Alpha or Motley Fool. I think it's Motley Fool, talking about, you know, earnings drops after Jimmy has an earnings call, and it kind of loosely worked around, you know, the Pwn algorithm posts, but it's kind of preying on a perception of cyclical rise and drop around earnings, and I'm seeing more of this than I have in the past, a lot more actually, which to me is a very good sign. Honestly, it's kind of an air of desperation to it. But these shield networks are continuing to attempt to influence Reddit and Twitter users, especially, and they're trying to sow division and stoke infighting between subs, between us and AMC again, or even between the mods, where we have a earnings call, price drop, and then there's a lot of attacks toward the mods on these subs that come right after that. It's almost in line with all of this. And they reinforce negative emotions on Superstonk. And right now it looks like there's an attempt to try and get us to sell shares at earnings, which we haven't seen before in articles posted. So I'm thinking of doing a DD and putting this together in some more coherent fashion. But in the meantime, I'll say that for us as a community, we need to keep thinking critically. Check sources. Being excellent to one another is actually a really good strategy. And then rejoicing in our community's collective strength that we have. We are literally under siege every day, and I don't know if you guys realize that, but collectively, our skepticism, our ability to remove emotion and think through problems and things that come up are one of the greatest ways to sustain ourselves and keep this movement going and keep undue influence out of this kind of stuff.
That's exactly it, Brian. You nailed it. You absolutely nailed it. And then, taking emotion out, that is the biggest key to any new investor, especially in a play like this, because you have to remember you're trading against a computer. It has no emotion. It has ones and zeros, and it's doing exactly what it's told and programmed to do. You have a brain, you have a conscience, you have emotion and fear, and oh crap, I just spent money that I might not have had to do, which it happens to the best of us, but you have that in you. Yeah. And so to be able to kind of dial it back and say, you know what, I'm in this is my investment, and this is my conviction. And that is where you have to have your own conviction. That's why this is kind of fun for me to see why everyone got into it, is to so everyone can kind of see, like, people have their own conviction, whether it was, they got screwed over in 08. You know what? This is their play to take back from 08, or the ability to make life-changing money, to whatever your idea is, just to have some fun, make some extra money. I don't know. But make sure you have that conviction. And like with me, I have it typed up on my phone, why I'm in this, and if I ever deviate from that, then I have to kind of go back and reevaluate, like, okay, what is my purpose here? Why am I in this? What's going on? And it kind of helps keep you sane.
One of those things, one of the maneuvers that you're going to see is, it's, from a psychological standpoint, the amygdala, hijacking that. How do they take your emotional center of your brain, where you're going to lose control with your rational analysis, and you're going to feed on that and attack somebody and jump on a bandwagon post and start sharing content that's not verified just because it makes you feel a certain way, or in price action, capitalizing on that fear and uncertainty and making you want to push that button and find that sell button you put away months ago. That's their goal in these social maneuvers and content maneuvers that we're seeing all across Reddit and Twitter right now.
Yeah, and that's another good thing, Brian. So there are some people that disagree with my little theory, but this is how I've seen people able to calm down, like, because everyone's afraid they're going to miss the peak. They're going to miss the peak. Okay, well, we all talk about a floor price, right? I don't want to talk about a general broad spectrum floor price for a stock. To me, you got to figure out your personal floor price. That helps keep the panic down, right? That means, what is life-changing money to you? Because my life-changing money is going to be different from Ladies, from Brian's, from Penny's, to Chase's. Everyone's price point is going to be different. What's life-changing to them? Okay. And the thing I need to also reiterate is that in the theory of a floor price, it's on the way down. It's on the way down from MOAS, right? And that's not on the way up. The floor price is on the way down, and the floor is lava. We don't touch it, right? So to kind of find your own personal floor, and I've gone over this a few times, but find out what you owe, all the money that you owe right now. Debts, so your student loans, your credit cards, your personal loans, whatever it is, and then your necessities, a home and a car. If you own a home already, what is it going to take to pay it off? If you have a car, how much is it going to take to pay it off? If you don't have either one of those, figure out a price point, what you're comfortable with, look around, get on Zillow, get on whatever, um, start looking around, seeing what the average price is, what kind of house you want to have. start factoring that into your price point, right? Same with your car. What kind of car do you need a new car? Do you need a second car? Whatever you need to pay off, right? So that you are completely debt free. Okay. And then you take your average salary of wherever you're living. Most of the country, family of four, 75,000 a year is a comfortable salary. California, New York, Colorado, random other places, 150,000 is roughly what I find for a family of four to be comfortable. And by comfortable, that means your bills are paid, you can go on vacation, you have food in your house, whatever it is, that's your comfort level. Multiply that by 10, 15, 20 years, whatever it is. But remember, you can always still reinvest. You can have a business, you can start things, you can have all other kinds of ways of making more money. So you can play with that number, that many a years can fluctuate, right? You can play with that. So you add all that up, tack on 40% because Uncle Sam's going to want to have his little piece of the cut, and unless you figure out like your trusts and other ways, tax advantages and things, that's where step 2 comes in, right? Once you figure this out. So you add all that together, that's your grand total. Divide your grand total by the number of shares you have, whether you're in GameStop, AMC, whatever it is that you need to figure it out for. Divide it by the number of shares. That is your own personal floor. It's going to be a hell of a lot lower than what everyone believes that these stocks can go to, the MOAS, right? And that way you can actually rest assured on the way up, as the MOAS is happening, once you hit your floor price, you're sitting at generational wealth after that point. You're like, okay, I'm set. I have my number. It peaks. Once it starts coming down, you're like, okay, well, I either have 1, 2, 3, 5, 10 generations of wealth at this point. And that way you don't panic. You see your floor hit, you're on the way up, then you're not panicked at when you're going to sell. That's just the end game with that. That's just my opinion. That's something I've been tracking since January. And then the part 2, your 3 favorite people that you're ever going to talk to after with all of this, and I would advise kind of maybe setting up these game plans now. Get a hold of your bank, get a hold of a CPA and an attorney. These 3 people are going to be your favorite people in the world because they're going to help you navigate a lot of this, because I don't think any of us have ever seen this kind of money that could happen with all of this. So those are my usually tips. Those are going to keep you calm and keep you sane when all of this starts popping off. So, and that could be, and again, there is no date. This could be, next week. It could be next year. I mean, think of the people holding since August of last year. This could be at any point. So just kind of, start thinking ahead and getting ahead of the game. And so when it does happen, you can sit back, smile, drink your champagne or wine or whatever you're having that day and enjoy it. That's my little spiel for that. Penny, what is going on?
This is going back to when we were talking about movies we like to watch, Big Short, all of that. So The Boiler Room is one that really bothers me because like small shell companies and like the other underbelly of the stock market that also should be looked into, that hasn't been looked into, that I would like to also I can't even articulate my life right now. No, I'm sorry. It took so long. I'm so tired now. But no, okay. No, I can't. I can't. I can't. I'm sorry.
No worries. I'm sorry it took so long to get to.
No, it's all good. I apologize, but I also want to say it's really nice listening to people talk about their exit strategies. I I like that we are all in this force together, and no matter what, something is going to come from this, like the changes and the ability for retail investors to have a fighting shot at making money eventually. Anyways, watch The Boiler Room.
No, watch The Boiler Room. I'll put that on my list. I've not seen that one yet. But no, you're right. That's probably the best thing about our community is that we sit here and we talk, and everyone comes from a different walk of life, so everyone has a different perspective. So the more we talk, the better we stand a chance. And I do think there's something, whether it's, you know, we hit MOAS or just change, I mean, even the change would be good, right? Like just change the market so that we all have a fighting chance. And that's happening. That's actually happening as we speak. Cousin is coming up. All right, cousin.
Hello, how are you?
I'm good. It's Sunday. And usually I'd be celebrating a little bit more, but we got one more day off. So
Hey. I worked yesterday, I worked today, and I'm working tomorrow. So fuck your 2 days off. Just kidding.
oh, I haven't been off. I mean, come on.
You're never off.
I'm never off.
You're never off. It's the life of a self-made, always working, always on the clock.
Hey, it's a good life though. It is a good life.
It is a good life. It is a very good life. I'm sitting here and I just wanted to have my mic ready so that I could hop in and out as you were saying stuff. But I didn't have something specific at the moment.
What got you into GameStop?
Oh Lord, how long's your podcast tonight? I'm just kidding.
I'm not sure yet.
So if I were to try to keep it simple, I like traditional investment. I like you know believing in something, believing in an investment, and just being passionate about that investment. And I didn't know what that meant a couple years ago. I've kept my eye on the market. I've found companies that I invested in over the years, and I believed in those investments as far as in a sense that I knew they were good companies, right? So like at one point I remember kind of consolidating my portfolio. I had Pepsi and I had Coke, and I'm like, well, what's in my house? Like I like Coke, but my wife drinks Pepsi, so we buy Pepsi. Like that's just how that goes. But I don't really like soda, and um so like when I was invested in Lockheed Martin, like I'm not, I'm not into war. I'm not into contractors. You know what I mean? Like I don't. But I thought it was a good company and it was going to make me money, and I did make some money off of it. But it's a little different with GameStop, and it's taught me what it really means to be passionate about investment because I'm into video games. I like fucking video games. Like I wish I had some posts up about what I got going on at my house, but it's ridiculous. Like I fucking love video games. And so again, to keep it simple, when I'm looking at Roaring Kitty's uh, bull thesis, and he didn't invent it, but he certainly perfected it, in my opinion. But as I'm watching it, it was just really resonating with me because I understood the things he was talking about, like as far as people thinking that we're going to go to the digital age really quick. So GameStops, they're not going to be a thing anymore because we're not going to have discs anymore. I remember when people rejected that idea. It was when the Xbox came out and they were going to not have a disc drive, and it was going to be all digital all the time, always online. And everyone was like, "Whoa, whoa, whoa! I don't want to be online all the time. I don't want to not have a disc." And they rejected that, and Microsoft had to backtrack like heavily and put disc drives in their systems. Like they were like, "Okay, guys, okay, we were just kidding." Like I mean, it was a big deal, and I remember that very very vividly. And I have a data cap, so like every Christmas I buy my kids games and they're digital, and we download, and I go over my data cap because it doesn't cost them anymore, but they like to charge more if you go over. So I'm supposed to be digital. I have all my TVs. I stream Netflix to all my TVs, but I go over my data, and then like fuck that. Like it's just not. So it's overrated, and it was not priced inappropriately. So, but again, he goes over all these little minute details of a bull thesis for GameStop, and it just really, really resonated with me, and I just became more and more passionate about it. The more I really understood what was going on, and it's just so clear as day to see that to me. Um, Again, I could get off on a tangent and talk forever, but that's what got me into it at first is just the bull thesis, just going over all the different aspects about why they're not priced correctly as an asset in the market. They're just not. They're just a very undervalued asset, and still today, I believe, very much so underpriced from what they should be on a fundamental value level. For a company that has $2 billion in the bank and is all the it's just ridiculous. Um, how undervalued they are, in my opinion. So that was the first time that I really understood. I don't remember who it was that was talking about having an investment, but he was talking about when you have a company that you're invested in, you go check out, see how they're doing, you go spend some money there, you go support the business, and that's what you have with GameStop if you're a gamer. And so again, like I said, that really resonated with me and it finally started to kind of click into place. Um, I just think there's so far for them to go on just a fundamental value, like forgetting about the short squeeze aspect of it. Um, I don't need that. That's icing on the cake. I do believe in it. I believe they got way too greedy. I feel like they over leveraged themselves way too much, and they really don't have any way to get out of it. I said a long time ago that I expect to see just waves. I feel like they got another problem every couple weeks, every month, every quarter. They have a new problem they have to navigate, and it costs them a lot of money to do so. Shorting is it's an act of arrogance, and they did not back off, and I still don't think they've backed off. And until they begin to back off, they can't even begin to unravel. They haven't even tried to begin to unravel. I promise you, they think they're smarter than us, and they just dug their heels in, doubled down, tripled down, quadrupled down, and they really, I mean, some of them probably know what type of problem they have, but I feel like a lot of them don't even quite understand what type of problem they have yet, um, because they're just that arrogant. Their head is just that far up their ass. So,
I appreciate that. No, and it last night when I was talking with a few people on the space, my husband brought up a good analogy. Like think of it as like this is silly, like a bug's life, right? They're the grasshoppers, we're the ants, right? We have a collective thought process. Like you have all these people with again many brains, many eyes, many ways of looking and researching, and some people have Bloomberg terminals, some people have Ortex, some people have different things. We have Unusual Whales doing his stuff. So um, there's so many ways to get information, and so if we're all working at the same thing as a collection in that sense, trying to find information and trying to get the information out, and reiterating this and double checking that and whatnots, we you know there's more of us to look at things than they have in their offices, right? So, and again, they're trading with computers. Like they're like, oh well, we could based on sentiment basically, because that's from my understanding how their algorithms work is based on sentiment and old data, right? They never had the ape sentiment to factor into their
not at
algorithms
all.
because and that's that's the biggest thing that happened this year is now the ape sentiment. Like they can't factor that in because well, we're human. We have human emotion and it differs on different days. So it's a fantastic thing, I think.
There's
It's
a there's
I
a
don't.
there's
I
a
have something
thing
I'd like
called,
to add. What you said, cousin. This is very interesting. When it comes to like the, when you say the value of digital versus physical, well, you still can't trade in your digital copies of stuff, right?
you will
Even
be
if you
able
buy,
to soon.
hopefully, yes,
My
but
not hopefully. My prediction is within 2 years you'll see a digital used game marketplace.
that would be great. But here's the thing: digital is technically more fragile than physical. If you have a physical disc, you can always replace the system and play that game again. But if you lose that game, you can't just replace the system and play it again. You have to replace the game. So it's not like for instance, just a couple weeks ago, Sony was talking about turning off the store, the PlayStation Store for the PS Vita and for the PlayStation 3. And people figured out that if the CMOS battery dies, you lose all of your digital games,
You're
but
done.
not but you're done, but not your physical ones. Those last. They are not as fragile as the digital copies are. And the digital copies, that's just an inherent flaw with the digital copies, right? It's stuck on that hard drive. It's fragile. It's locked by DRM to that one person. You know,
That's why
it's
people won't do it. That's
no,
why so many
exactly.
people refuse. They won't
It's
submit to
so
the all digital. They
yep,
refuse. They're just gonna buy disc because we've all seen it happen. We've
yep.
been here. We've seen it
They're not
happen.
supported
Oh,
that
my
long.
Xbox is gone, and now I got to
Yep,
get the new Xbox, and I don't have my games. I got the new
yep.
PlayStation, but I want to play my old game. Like we
And you know
know
what?
that.
I'm a big collector of Final Fantasy. I have every single Final Fantasy made on disc. And because I mean, how else is there to you know stick with your favorites? It's
No,
still
and then
that
you
way.
got the nice box art and shit. You can put it on
It's
the shelf on
beautiful.
the
I got all
wall.
the art books. I got all the art books. I even have that Kai figure of Cloud sitting on my because I got
Yeah.
the special collectors on my shelf. That's the kind of experience that you're losing when you go to digital. You know,
So,
I mean it's a completely different experience, and it's much more robust, and it's not as fragile.
so
So
recently,
collectors are always going to go to GameStop. They're always going to find those physical copies first.
yeah, and
It's nice to have digital
would
as backup, but
slightly,
you want to stick to physical.
I would slightly disagree with that, only from the perspective of like, I think the challenges of digital, what you described, are challenges of digital today. But
Those are
if
going away. Those are going
exactly
away.
like if
Blockchain
GameStop's
solves that.
able, exactly, blockchain solves that. If GameStop is able to pull this off, picture like you have a license key that's stored in the blockchain. You're welcome to re-download the game as long as you have that license key in the blockchain. You could, re-download it, no cost. If you get a new game system, if the CMOS battery dies, etc., as long as you have the blockchain license key, I think that does away with that. So I think the issues you brought up are valid issues today, but this is just another opportunity that GameStop has to again transform the entire market of used video games for digital. That today at today's current stock price, GameStop's just over 10 billion. That is a drop in a ocean of what the potential for the company is, in my perspective.
Oh, I'm with you on that. Absolutely. Absolutely. And I would love to see it. But there's also one other hurdle. You have to get the other video game companies that have those app stores like Sony and Nintendo to play along with you. And I think if you actually had a blockchain product that could do that, I don't think that they would fight that. They might even pay royalty fees to GameStop. Just think about that.
They will.
What if Sony says, "Hey, we'll give you $10 billion to take over our entire store"? That would be fantastic. They could host the store like Amazon Web Services hosts websites, and it could just be that could be the one-stop shop for all your digital stuff. I definitely see the potential for the blockchain in this. But as far as like for now, like when they were talking about like you were talking about overshorting them and this immediate oversight, it is true that right now though that physical copies are less fragile than the digital copies, but in the future they might not be thanks to GameStop. So I mean, fantastic.
I was just gonna say earlier, they have a thing. It's called the 90-90-90 rule. I believe that's what it's called. I think it's something to the effect of that 90% of traders will lose 90% of their money within 90 days. And that's the type of mentality. That's how they look at things. They look at things per quarter, and they again they just underestimate people. They think that they can use their computers to just mess with your mind and shake you out. But I mean, when in doubt, zoom out. Just look. You should do the research. If you haven't seen any of Roaring Kitty's videos, that just makes it easy. But if you want to do it the hard way, look at the information that they've put out. I mean, they put out their quarterly results. You can look at the numbers. You can crunch the numbers yourself. Do your own math. I mean, it's not hard. You can
I grew
compare
up playing
market caps.
Dragon Warrior. That doesn't work on me.
Dragon Warrior, man, I put some hours in on that game. That was such a grindy.
We all did. We all
What a
did.
wonderful game that was.
So, I mean, think about that for a sec. You guys are sitting here talking about games that you have to grind for, right? Like, did they not factor that into the
They didn't.
equation?
They
It
didn't
should have.
know.
They
They
should
didn't
have.
know.
They should have. Anybody who's gone after all the special weapons in every Final Fantasy to nail those trophies, think this is child's play.
Yeah, I mean, I'm talking like most of us, we either played like, Final Fantasy or Halo or, heck, even I'm talking like Mario World before save was an option. Like, um, we kind of grew up for this moment to just, fight through it, grind through it, and take the abuse, right? Um, I think they miscalculated on that one. I do have something from Brian that he messaged me before he left. He said, "Hey, I had to run. Didn't want to derail the conversation, but something to maybe mention to the group before he has time to write up the DD. One was to be wary of another wave of social attacks in the next 10 to 14 days. This is common. They will try to cause mass panic. Sorry, it just totally messed up on me. Mass panic cause confusion or escalate rumors quickly, such as DFE sold or false GME company news. The second one, more common day-to-day influence campaigns try to generate arguments among members, protest of community norms, mod drama, bandwagoning, and propaganda to divide the strength of the community or movement. And three, our job as holders who want a community to thrive are encouraged discussion, welcome contrarian views of data or conclusions, spread verifiable information, and actively squelch rumors with fact. Stay calm, think critically, and be excellent to one another. Through the next 10 to 14 days. So this is, and we've seen this a few times, and I will put out this, like, anyone that is part of BullHouse, we try not to release anything that is not peer reviewed within each other. And when I say peer reviewed, it's 5 or 6 of us trying to make sure all the right information's in there. Just so we don't start spreading FUD that we don't, and if it does come out as FUD, we will apologize and say, guys, this is just what we're seeing. And if we're wrong, we are wrong because we are human. But I mean, hell, I welcome everybody to, say, hey, I'm going to poke a hole here. I'm going to poke a hole there, because that's how we get to the truth. Right. So, if you see something that seems kind of off, before we start attacking one of another, because that's kind of what they want, right? They want us to go at each other for just random ass reasons. DM the person if you can, or just say, hey, can we talk? Be kind about it, because they could have found something that may seem like a reliable source, and they're posting it, and so that's, we gotta, I know emotions are high. Emotions are very high, actually. But we just kind of have to take a deep breath and say, okay, let's think logically here. Is this true? What's the timestamp on it? Like, it's all these little nitpicky things that you kind of have to look at. And then, I've even gone as far as like researching the journalist. Like, okay, is this journalist notorious for posting really weird stuff all the time? And if that is a common trend, I just trash it. I'm like, you know what? I'm not even gonna give it the time of day. But yeah, that's my 2 cents with that. So Brian, if you're listening, thank you for sharing that. Just be on the lookout. Like BullHouse, we are broad market, which makes us kind of a funny little entity with all of this, because we see the connections with everything. So we do post about a few different things on and off. We all do have GameStop, AMC. We are in the meme stocks. Like almost all the staff is in all the meme stocks, pretty much. But if you do see something that's off with one of our posts, I'm going to say this right now. Like, if you see like me saying, oh, hey, look at the real estate, that's literally for the broad market people. That's not me saying, hey, here's a weird chilly thing. It's not me being a shill. That's just what we do. But I will try to call out the FUD as much as I see it, for the sake of the community. If I see something off, I'm like, I'm not liking this. So I will be as out there as I can for the next couple weeks, trying to make sure the community just stays sane, if that's cool. All right. Did we have anybody else that wanted to come up and share their story or anything? And then I did have from, let's see, where was your thing? This is the way tweeted out. I put it at the top. Can't speak in the space, but to build off what you were just saying, the following applies to what I could assume. I said windfall from selling off shares, who to contact and how to handle yourself. So he did post that up. So I did share that up to the top of the nest. But yeah, guys, all the DMs and all the tweets, you guys have been phenomenal tonight. This has been a lot of fun. But if I do we have anyone else that wants to share DD that they had, or why they got in, what's their conviction or anything? No one? Okay. Oh, Jeff.
I have maybe just like a couple more things that I've seen this weekend that are, I mean, it's not big DD, maybe just discussion points. Like I know we've talked a lot about computer share, like in the past, like as the the main transfer agent that like holds GME stock. I mean, I've seen some interesting kind of information come out that where people have suggested that the more people register there, the less shares that are held in the DTCC, which is essentially what the funds have to play with. Now, I mean, I haven't gone super deep into it, and done a lot of research off of it, but just one of those things that I've seen floating around that I thought was interesting. So I don't know if anybody that's up here or on the panel here like has any thoughts on that. And maybe not. That's okay. It's somewhat fresh.
Oh, I think Sue does. Sue?
Hi. Yes, I did have some experience with the DTC, with the computer share, because I've been investing for over a decade, and I did put back in the day, I put some shares into the computer share, and when I wanted to withdraw it, I don't know if it's the same now, but before when I tried to withdraw it, I had such a hard time. I actually had to fill out some paperwork. I had to go get a medallion stamp, which is different from a notary. Because when I got the forms in the mail, I said, oh, it looked like a notary form that I needed to fill out. So I said, oh, I'll just go to the bank and get this filled out. It's a notary form. So I went to the bank so I could withdraw my shares out of computer share. And the bank said, oh, no, we don't fill out this. You need a medallion stamp. And I said, what's a medallion stamp? So I had to go to Fidelity and have them fill out the paperwork. So my concern with computer share is during the MOAS, when I place my limit sale, don't do market sale, by the way, do a limit sale. When I do my limit sale, I need the share in Fidelity so I can execute the trade and collect my $50 million per share. It's going to be difficult if I have that money sitting in computer share during the MOAS, because what I know is that the MOAS is going to go quite quick, rapid, and so I need to make sure I'm at the ready. I have my shares in Fidelity ready to go, because to get it out of computer share back to Fidelity, it took me quite some time. And I'm not sure how computer share works. I don't know if they updated their system, if you can sell directly off of computer share, or is it the same? Do you need to get the medallion stamp to withdraw your shares and transfer it to the Fidelity? So if somebody can chime in on that. But my experience with computer share was it was just difficult to get my share back. Like it took like a week.
Yeah. No, that's interesting. And yeah, no, thanks for sharing. I mean, I know they're not a broker, right? And that's not really their business, right? That's not what they typically do, is engage with retail in terms of actively buying and selling. Like they're like a transfer agent that would register shares. So yeah, I mean that's an interesting take. I mean, I guess one thing that I potentially disagree with, though, in terms of what you said, is that the MOS is going to happen fast. I don't know that that's necessarily the case. I mean, it could almost be kind of in waves. Like at this point, I mean, just based on what we've seen, I don't necessarily see everybody panicking at one time and saying, "Okay, we're gonna close our positions now." I mean, it's possible. Certainly, they could be forced to through like margin call situations and stuff like that. But I don't know. I would just say that one's still up in the air for me.
Yeah, Chef, I'm right there with you. Like, from anything that we've researched and everyone's been kind of writing about in the last 9 months, it could easily be, a week long, 2 week long event. Like, it won't just spike up and spike down. Because you're gonna have, because I mean, you're talking, if we're okay, so GameStop, if we're talking ape sentiment numbers here, I think the last I heard was 25, 50 million. I can't keep track of ape sentiment numbers. I say that because I say it that way because we don't know what it'll go to. I just know what I read and what people are, putting it as. So the ape sentiment,
www.gmefloor.com.
yeah, right. I check it daily. No, no, so I say it that way because if you're looking at 25 million, it's not going to be a quick event because you have halts and the halts, guys, that's the stock market. That is literally the circuit breakers having to do that. It's set in place to keep stabilization in the market. So things just don't go completely haywire. So you're gonna have, and those can last a minute, 5 minutes, 15 minutes. They can last a half a day. Like these circuit breakers can last a while, and so you have to kind of account for those. And then you're gonna have your ups and your downs. You're gonna have your day traders messing with it too. So I mean, I don't think it's gonna be a quick thing. It's I don't think it's gonna be a quick thing at all.
Oh,
um,
can I say something? It's actually it's quite funny. There was this one person on Reddit, and he did a spreadsheet, and I just found it quite humorous because he said, "Okay, I figured it out. It's gonna." So he figured out with all the halts, and if GameStop went up 10% every 10 minutes, then there's a uh, the 15-minute halt, and he calculated it, and not that saying that he was correct, but I just thought it was humorous. He said if that happened, we would go from like 200 from where we are like $210 and then to 354 in the first day, then the second day, then third, and by the eighth day we would hit $50 million. Not saying that it's gonna happen in 8 days, but I just thought it was quite humorous that he had done the calculations of the taking into account the halts as well.
yeah, so that's right there. Like you're at least 8 days, at least. So yeah, I wouldn't be too worried about it. You missing it by any means. I mean, you would have to be deserted on an island with no cell service and no way of actually checking the stock to actually miss it, especially if we have alerts set and everything. So that's where I can tell people, like, just set alerts, at different price points. Um, and enjoy your day. Watching a chart minute by minute or even 5 minute by 5 minute, you're going to go insane. We've been doing this for 9 months. So, get out, get some exercise or watch a movie or I don't know, figure out something, but you just got to take care of yourself. And once it starts moving, your alerts will let you know, and then you can go watch it. Then you can go and celebrate it. But that's just a friendly thing to do, to suggest, I guess. Chase, did you have something?
Yeah, I just wanted to add about the MOAS, potential MOAS time frame. Uh, I looked at prior squeezes, short squeezes, and they were on the order of several months. So I kind of want to put that out there. I like to look at historical data, and I think that because this one is going to be a much larger squeeze, I think it's going to take a bit longer to play out. There's going to be a lot of money moving back and forth. It's kind of like moving through a bottleneck, if you will. And that's going to take some time to play out. So I agree. I don't think it's going to be quick. I think it's going to take some time.
Yeah, absolutely. So I yeah, I wouldn't be too worried, guys. And that's why, again, like I said, we're gonna be doing, 2 a day podcasts, starting in a couple weeks, not this week, but next week. And I will, if I see something funny, guys, I will call it out. No matter what the meme stock is, whether it's, you know, Nokia, BlackBerry, AMC, GME, whatever it is, if I start seeing something a little bit funny, I'll call it out and be like, okay, what's going on here? Why are we going up, $50, $60 at a time? And then we start, gathering resources. Like I said, I have a friend that has a Bloomberg terminal. We have Ortex. We have all kinds of different things that we have at our disposal. So we can find it if there's something happening. I'm not too worried about that. Hey, can't stop. What's going on?
Hey, so I had a question and a comment. So, well, I guess both. So I feel like when it does happen, it's gonna be like a combination of things, right? It's gonna be like shorts covering, some FOMO in the beginning where, retail traders can still afford to buy shares. I mean, it's gonna get to a point where I think you'll know that's not retail buying any. And I mean, there's still gonna be options that are gonna need to be hedged for that are gonna go into the money. And then my question was, does anybody know what the stock? There was a stock like I don't know when it was, maybe within the last year or two. I think it got delisted or something, and I guess they never took it off trade. Like they never stopped the trading on it, and it went up to like I don't know, like 35 grand within like a day or two. Does anybody remember what stock that was?
No, but I can try to look for it.
All right, that was kind of it.
Let me see if I can find it.
Are you talking about recently happened?
I think it was like a year or two ago, or
No.
maybe a little longer than that. It wasn't any of the stocks that like any of us really talked about, or at least that I know of. But yeah, I think they had delisted it, or it was supposed to be delisted, but it never got done, and it kept trading, and for some reason it shot up to like 35 or 45 fucking $1,000. Like, so I'm just wondering if anybody knew or remembered what it was.
No. If you'll send that, if you send that, like, type me that question. I'm gonna try to find it. I don't remember that.
All right, we'll do.
Thank you. Appreciate it.
So if I could comment on Can't Stop's comment regarding the hedge funds that once they start covering. I'll preface this by saying I am not an expert in this by any means, but just thinking through this rationally, I would expect the hedge funds that are in the deepest hole, but with deep money bags as well, that they will hold off on covering for as long as possible. They'll probably be the last ones to cover. So if we kind of follow that, I would think the smaller hedge funds are the ones that will start covering. And so with when MOAS does happen with the price fluctuations, once it starts increasing, I think it's reasonable to expect it will peak, a small peak, but it will reach a peak and then start coming down. And then as long as people still do not sell, there'll be another peak where additional hedge funds, they get margin called. If they fail those calls, then they'll get liquidated, and then we'll see another peak and so forth. So yeah, I would expect a period of cycles with increasing higher highs. And yeah, I hope that adds a little to what Can't Stop, what you were commenting on.
Yeah, and I actually want to get people's thoughts or opinions on what people think about like the theory that at at some point, trading in a way is going to be kind of turned off, and it's just going to be whatever DTC or one of those fucking ABC places that's just gonna be buying and burning the synthetics, like just rapidly buying shares, whatever's available at whatever price, and then burning the synthetics or throwing them out, and then just keep going till it's at its float or the float it's supposed to be at. Does that make sense?
I can speak on that if I may.
Yeah, go for it, cousin.
My opinion and my understanding of it. I was actually just speaking to a coworker, so I missed a couple minutes. Um, but on almost that very subject, the DTCC, the way I understand that it works, um, if someone wants to buy a stock, if without the DTCC, if you buy a stock and then you have to wait for one to be available, and if you were selling a stock, you would have to wait until someone's like, okay, I would like to buy this stock at that price. And stocks that have a lot of liquidity, a lot of trades, it wouldn't be so bad, but we don't like to wait, right? We don't want to wait. Who wants to wait? No, I want sell, give me my money. Buy, give me my stock. Like it's buy, sell, buy. Like they want those transactions to go quick. So enter the DTCC. They facilitate the trades. They match buyers and sellers. They just take all the buys, they take all the sells, and they just match it up later. And that's where things got fucked up because now all of a sudden it's really lopsided where they've short sold all these shares and we have all these buyers, but the buyers aren't selling, right? So what you were saying as far as the computers and such, how I understand it is that there's a very real possibility that if a fund gets liquidated, insurance kicks in, DTCC kicks in, and a lot of computer buys happen, and they don't care about the price. They're just locating the asset. They're locating the share. So if we all have really high sell limits, like everyone, the lowest share they can buy is $1 million. Like the computer's going to go buy that share. That's how it's been explained, to my understanding. And I do believe there's certainly some truth to that. I don't know how much truth. They're gonna weasel and wiggle and cheat their way out of as much as they can. But insurance kicks in if they liquidate, if they go under. If someone bankrupts and they can't provide what they're supposed to, and there is going to be there's very likely a situation where computers will be making some of those transactions. But the DTCC, I mean, they facilitated all of it. It's their fault. They're the ones that allowed these funds to get so over leveraged in the first place. They're the ones that allowed the situation to occur. So it's ultimately going to fall on their shoulders and their $1 trillion insurance policy. So that's what I can speak to, I think.
And that's kind of what I understood when I heard about it. There's this guy, uh, Easton Wade, on YouTube. I don't figure out what his Twitter handle was, but he pretty much explained it like that. Like it would be just computers, and there's no feelings, none of that shit involved. It's just whatever the closest sell limit is, it's gonna hit that. If the next one is 500,000 or $3 million above that, it's not gonna care. It's gonna fucking just keep going till whoever whatever fund got liquidated is zeroed out, and then it'll move on to the next one if another one gets liquidated, and so on. It'll just keep going until
Yeah, because once they go under, they don't get to make the choice anymore. And the person that's has to locate the asset, they have to balance the books. So they're not at that point it's insurance. It's not a fund that is trying to make sure that they're getting a good price. You know what I mean? Like once they bankrupt, there's no choices anymore. Like it's done. The shares have to cover. They have to be covered. So
And what's also helpful is, keeping in mind, say a million shares get sold by apes, like a million real shares. Well, the hedge funds that are short cannot take these million shares and pass them back and forth between each other to use that to close out of their full position. When you short a stock, you essentially say you short one stock, you have -1 shares. If someone sells and you close your short position, you do not get +1 share. That share you get to cover to close, it makes you from -1 to 0. So there will not be a share that can then be passed back and forth. Just I think there's every once in a while we see an uproar of concern around, if people sell, that hedge funds will be able to use those shares and pass them back and forth, and that's not necessarily accurate.
So if I can add real quick from YouTube, Dan Sage, he's been saying hedge funds are underwater, but they cover incrementally, and a lot of convertible arbitrage going on too. Convertible arbitrage with very cheap long calls between IBs for the borrow over the counter, then just short calls where scanners like UW call the move bullish, but really it's a sell.
Can I add something, Kenna?
Yes.
And to piggyback off of our two wonderful, when we were talking about the short squeeze, Thomas Petterfee, who's the chairman and founder of Interactive Brokers, and I quote, said on June 7th, 2021, he lives out in Florida. He stated this on a television interview. It is extremely tempting to short these meme stocks, but unless you have huge liquid resources, please try to resist the temptation because these prices can go to unmanageable highs before they settle down to a reasonable valuation, and you may have to cover on the high point. In addition, he stated on January 28th, 2021, and I quote, the only reason to do that is to join the GameStop short squeeze. If the short squeeze happens, the stock could go to infinity practically because, of course, the shorts have to borrow the stock. And once there is no more stock to borrow, they cannot deliver, right? But they have to. So the broker has to buy the shorts at any price. So there is no solution to this. So shorts are liquidated.
Yeah, I think I saw that actually. I think I read that at one point. No, and it's a possibility. So and I'm going to start wrapping this up here shortly. But so Dan Sage, um, so he's saying the Fed won't allow it because he said you think the Fed would side with the retail. No way. So I think what's happening is there's a very big rock and hard place at this point, right? So, and we've covered this a few times, and just this is just my own opinion, my own theory here. And if I'm wrong, I'm wrong. That's okay. I'm okay being wrong. But in my head, when you think of what's happening with the stock market, okay, for decades, right? Decades, century, um, the elite, the 1%, has been able to, use the stock market to build wealth. They've been able to short companies out of existence. They've been able, Radio Shack and Toys R Us and all these other, companies. They got very predatory on these companies, and they took the owners' livelihoods with them and jobs and everything else, right? And so they profited off of taking businesses down, and everyone just kind of looked the other way about it, right? And so if there's an instance where, the federal government or anybody tries to, step in and try to kind of pick sides, I guess, at this point, um, you're going to lose a lot of faith on our stock market because, that's literally saying, whoa, now the 1% can play these games. The 1% can put people out of businesses, out of jobs, out of livelihoods. And, people, it's the whole thing. Like suicide rate goes up when jobs are lost. It's a statistical fact. And it's actually increased. I think it's like 7% now or something. It might even be higher now with COVID. But if you lose the faith in the free market, what the United States is based on freedom, right? You have a free market where you can go build wealth in the stock market based on trades and everything like that. And we're always told, do not put more money into the market than you're willing to lose, right? That's what we got taught. That's what we're taught all the time. It's a gambling place. It's a dangerous place. You're going to lose money. And so No, you don't need a disclosure, Dan. I understand you're long, but no, this is just my thought process here. So if you lose the faith in the free market, in our stock market, that's our bread and butter for our economy, and international investors, domestic investors, will just pull out. I mean, we've already seen it with different hedge funds and financial institutions that with everything going on, all the corruption and everything being exposed, and the meme stocks and everything, there's already investing corporations pulling out and going to the Asian market and the German market because they're like, I'm not touching the U.S. stock market because it is way too crazy right now. And so, if you have that out there, and it'll blow up if there is some kind of stop, if they come out and say, sorry guys, you can't win this, it's done, it's game over. And so then you have all of our stock market crashing, and then you'll have the economic crash and everything. So it wouldn't be a good thing at all, in my opinion. This is just my opinion. This is just how my brain works and how I see things. But you'd have a really bad situation on your hands economically.
Don't forget that the dollar probably won't be the reserve currency anymore either.
Nope, it won't. I wasn't going to touch on it, but you touched it. And no, the U.S. dollar is the reserve currency around the world. If our dollar goes down, everyone else's dollar goes down, and they're going to say, we are not messing with America. We're just not. Like, we're not going to touch you with a 10-foot pole. And you have to remember, we're also in this little funny thing with our debt ceiling and who we're paying our debts to. So there's we're in a predicament. We're in a very, very interesting predicament with all of this, and it's just coming. They kicked the can from 2008. This is literally the can being kicked from 2008 because it's the everything bubble. Like, we have real estate, we have tech, and I say tech because the cost of what we pay for technology is not worth the innovation that we have. The iPhones are no different from last year or the year before, really. They upgraded the camera, whoop-de-doo. Computer chips and cars and things like that. Like, there's really no big innovation that we're seeing for the price that we pay. And so then you also have, crypto being as crazy as it's been. NFTs coming on the spot. That's not a bubble. It's just an interesting little facet into the crypto world. Commodities. We have oil and gold and silver. Like, there's all these things that tie in together that we have to consider. And this is why I love my broad market aspects of this, because they all tie together. So yeah, it's a precarious situation to see if anything comes out and says, sorry apes, you still lose by default. You will have, and that's the other thing. We're a global community. It's not just like we're all sitting here from the United States, right? Like, we have people all over the world in GameStop, AMC, and everything. We have people all over the world talking, and their eyes are on what we are about to do. And if we screw that up, I am going to go, well, I don't know what to say, guys, because they failed us. That would literally be them failing us and saying, no, I'm sorry, you can't do it. You just can't. And at the end of the day, I know our community seems very, very, very big, right? We are very vast. Like, there's probably, I give or take 10 to 15 million people maybe invested in between the meme stocks. I say about 10 to, and that's just for average retail investors, about 10 to 15 million. That's not a lot of people in the grand scheme of the world. That's not a lot. There's only, I think there's like 56 million millionaires in the world. 56 million millionaires. And there's about 10 to 15 million of us. So it's really not a lot. I don't know, something to think about. Real estate takes time. Waiting for MOAS office. Yeah, they wouldn't challenge German government. No. Thanks, Dan Sage, for the compliment. I appreciate that. But yeah, if anyone else has anything to add up, we got about 15 minutes or so.
I just wanted real quick, since you brought up the debt ceiling. I mean, the last thing I seen about that was, I think it was like over 100 Republicans or something were vowing not to vote. I know they like to like push it to like the last minute or whatever, but I mean, I think this time it's like, it seems like they're really fucking cutting it close. And like, I think 100 Republicans vowed not to vote to raise the debt ceiling. I was just wondering if anybody like has some thoughts about that, or I mean, doesn't like our rating, our credit rating go down, and just like fucking tears everything up. I mean,
Yeah,
not not
it's not a good thing.
GameStop,
So
but
I know it's not, and I will touch on more on this tomorrow, because we're doing broad market tomorrow. Go watch Philip's thing from yesterday. We kind of talked about it. He's not too concerned about it because America has never defaulted, and we do print our own money. But he did come around and say it's a possibility that we default, and so in that case, the and what I see, what I read, and everything, the Treasury could run out of money by the middle of this month, because you figure we're what, 27, 28 trillion, 26 trillion dollars in debt. It's a lot, and so it's our credit rating would go down, and again, faith in the market, faith in our dollar. um it's a interesting situation, but yeah, we'll touch more on that tomorrow during broad market talk.
Can I also jump on that? I would like to throw a couple words. If anybody's got a tinfoil hat that they would like to put on while I'm speaking on this, but I think the whole thing's just mental manipulation anyway. I don't think it fucking matters. All the value to our currency is completely arbitrary. It's not backed by anything, and I know a lot of people know that. They know it's a fiat currency, and it used to be backed by gold, and it's no longer backed by gold.
It's like
But
petrodollar now. It's basically oil.
right, right. Well, no, exactly. That's exactly it. It is 100%. But even when it was backed by gold, like what is gold? Gold is ooh shiny rock. You know what I mean? Like gold isn't anything either, but we assign just this arbitrary value to it because ooh shiny metal. Like the whole thing is just like fucking. It's just woozah. It's like ooh smoke and mirrors. Like they ooh get scared. We're gonna run out of money. You know, like it doesn't really work that way. And it is a petrodollar. It is backed by oil, but more importantly, it's backed by guns, a lot of guns, and that's why we have the most guns, because we intended to just continue printing money as we need it. That's my opinion, and I feel like they're laughing at us. If you look at the way that our dollars look, the colors on the dollars match the colors of monopoly currency. I mean, there's symbolism all over the dollar bill, Masonic imagery, and I mean, they're laughing at us like it's a joke to them that they just put these media stories out there and just get us to they hurt us like sheep. I mean, it's so cliche to say, and I hate to even use that word, but it's just goofy. Like they're just messing with us. So I'm not, me personally, like I don't care. Like do what you want. Like I don't even watch that stuff. Like I don't care. You can't phase me with that because I know that they're not gonna allow the game to stop. So their motivations are just mental manipulation, just to get you to bend you to their will, and that's in most things. That's how hedge funds make their money. They mentally manipulate you to influence your investment decisions. They want you to sell off so that the price drops so that they can then buy, and then they inspire you to buy more and drive the price back up and make them a bunch of money. And they're always a step ahead, and they just when they know what's going to happen, it's really easy to make money off of those peaks. So I think it's the same. It's just an extension of everything else. It's just what they do. They just like to manipulate. They like to scare people into doing what they want. So I'm not worried about it at all, personally.
No, I can't argue with most of that.
Yeah, I'm sorry. You can remove your tinfoil hats now. I'll come back to it.
Hey, tinfoil hat. Like I told you guys, I'm gonna start going long on aluminum. I'm gonna just start.
Oh man,
Um,
I'll make you rich, just me. I can't tell you though, honestly though, I can't tell you how many things were conspiracies, 15, 20 years ago to me that they then come out and say, oh yeah, no, that's true, that's real. You know what I mean? Like chemtrails. That was a big thing back in the early 2000s. And then they're like, oh,
Oh,
no,
Lord.
that's a real thing. Or like Area 51.
We-
You know what I mean? Oh, no, yeah, that's declassified. Yeah, you can go check it out if you want. You know, probably don't do a YouTube video there, but
Yeah, I think we've all
Okay.
noticed that though.
Has it-
The history of the conspiracies coming true, huh?
Dee, did you have
Jane?
something that you wanted to add?
I did. At first, I want to just comment on that. Yeah, it's a little scary when Alex Jones is right. that's
Yeah,
that's that.
the
hey,
end
you
game.
ain't
Yeah,
kidding.
right. That's scary. I wanted to just add on the CompuShare conversation from earlier. My understanding of that was that you would put your shares in CompuShare that you intended to keep, your infinity pool that you're going to keep for yourself, and the ones that you want to buy, that you want to sell, those would be in your regular broker because of exactly what I think it was Tsunami said, that it's slow. I don't know if it still needs a gold seal or whatever that seal was, but it's slower. It's not quick. That was that. I also wanted to ask, did you guys hear anything about the Citadel? And I got in a DM thing that I'm in, somebody said, what about the potential bombshell regarding Amazon and Citadel? Crazy stuff, huh? And I thought I would see something about it, and I haven't seen it. Anybody have any comments on that, or is that just BS? That's all. Thanks.
I'll hop in with a comment, and this is my own opinion. No facts to back it up, so I could be completely wrong. I've seen some of what you're describing with the Amazon potential connection. I think this is all very tinfoil hatty. I'm all for speculation as long as people call it out as speculation, not putting it forward as truth, and then trying to pull the facts in later. The way I see it is the 1%, or rather the 0.01, the uber rich, the uber wealthy. I think the way they hold on to their wealth is they might not necessarily care who among them is profiting, but I feel like they try to just keep this money within their close knit community. And it's not, I don't think it's surprising to see these mega wealthy people being connected with each other, whether it's Bill Gates, Jeff Bezos, um, Ken Griffin. I think it's just, they've amassed so much wealth. They became part of this close knit community. They find ways to do business with each other. Sometimes I would hope it's not always shady, but who knows what kind of backroom deals are made. Um, but I think just the fact that there's some ties doesn't necessarily merit a whole lot of conspiracy theories. But that said, who knows? There might be something there. I just haven't seen any like evidence.
Thanks. That seems a little obvious, like duh. Like I don't even know why he put that in the chat. Of course they like to keep their money amongst themselves. I mean, they just do. That's not, I mean, I believe you is what I'm saying, because
Yeah.
that's just like, that's not even a conspiracy theory in my opinion, because they just do.
Yeah.
The other,
Hey, Dee, just remember the infinite loop. I'm just going to put that out there.
okay, I'll have to think harder about that in a minute, because I want to add one more thing, which is I remember somebody saying back way, it's been ages ago now, but when they were talking about the MOAS, that it would be better to sell off a share at a time as you're going up, so that you hold it, so that, people who have less shares can get up there as well. And then you're not doing it all on the downswing either. You're not losing as much if it peaks quicker than you think it's going to. which it won't from the sounds of it. I love that. Was that Tsunami that read that quote from that woman speaking about short selling unless you're going to get into GameStop? That was good. Um, anyway, so I guess I wanted to know if that was still true. Like, or is, I mean, I know we don't really talk, well, we are talking about exit strategies, kind of, aren't we? I mean, it seems like, I mean, I don't have that many to sell, but I would sell them off staggered because I just would. Is that smart or no? That's it.
I would say scale in and out of any trade at any time. So that would include GameStop. If you're gonna, if you're gonna be planning an exit, I would certainly scale out rather than just like sell all at once. That's just my opinion. I won't get too far into it, but just any trade, I think you scale in and out of.
Yeah, that's my opinion too.
Yep. Agree.
DPS, what's going on? You haven't been up here at all tonight.
Yeah. Hey, Kenna. Thanks for allowing me to speak. Yeah, I just wanted to comment on. I don't know the details behind what was what the recent Amazon discussion was on, because I don't think that they were discussed. But this is something that's discussed in the AMC community in certain capacities, and what it essentially involves is the sort of weaponization of hedge funds to manipulate competition. So I think that the traditional sort of like shorting stuff into oblivion was, more to just like essentially make money off of bankrupting companies. But this sort of has like a strategic business spin on it, to the extent that certain companies might be targeted in collaboration with investors to do things like allow Amazon to capture the streaming market by taking down the theater industry, or something of that nature. And at least that's how it's being discussed in AMC circles, at least in part. So I just wanted to throw that into the mix.
To top onto that, Jackson Thomas on YouTube said Amazon has copied their competition products and promoted themselves among other unfair competition tactics. F Bezos. So, yeah, you guys are right on the same thing. So, I appreciate that. I hadn't really heard anything about the Amazon thing. I guess I've tuned it out, but I appreciate you guys talking about it for sure. Sue, what's going on? We
Hi.
got about 4 minutes.
Oh, okay. I just had a quick question regarding the MOAS. When it happens, I was just thinking, if we own the float 100 times over and we don't sell, then the hedge funds the computers have to buy our shares. Is it possible that they will never be able to cover, even if every single ape sold their share and Ryan sold all his 9 million shares and all the 73 million shares that were distributed by GameStop were sold? There's still that amount outstanding, those fake shares that still have to be covered. So the question that I have is, can they ever truly cover, even in the face of all the apes selling all 73 million shares?
And this is what would cause this is why it is the MOAS. They have to buy these shares time and time and time
Okay.
again.
Okay.
And so this is where I say, don't trash the day traders too much, because they are going to help with the volatility, right? Because they are buying and selling on the rips and the dips and everything, while we're just holding. Like, we're just holding our shares. The day traders, the swing traders, they're the ones going to be helping with the volatility on the way up.
Got it.
And kind of stabilizing it on the way down too. So I know a lot of us get really irritated at 10:30, noon, 1:30 when we're like, stop dipping, but they're just doing their job. Okay, just leave them alone. There are all vital parts into all of this, but no, so in a sense, with like GameStop, AMC, and the heavy shorted ones that are 14 some odd times over. I don't remember what the numbers are at this point, because it's just asinine. They essentially have to buy each share 14 times. Each share has to be bought that many times for them to cover. And that is what causes it to just be such a phenomenal play for us. Because if we just hold and write it out, the day traders do their thing. It just keeps going up and up and up and up. And then the algorithms for the hedge funds, they have to buy and sell their own shares. So they're buying at a price and then they sell it off, and then they have to buy at a higher price and they have to sell it off. And so all of that volatility is what causes the stock to go boing. So as I couldn't make a rocket ship sound. I'm sorry guys, that's not my thing. So you get a boing.
Thanks, Kenna. Thanks.
It's not a problem.
Quote of the day: "Stonks go boing."
Stocks go boing. They don't go burr anymore. They just go boing. I'm sorry. It's getting late. So can you tell? But yeah, that's from my understanding. And if everybody wants to correct me, but that's how I've seen it all this time. So, and it's so stupid that these stocks are this shorted. It is completely asinine. But I do appreciate everyone that came up here and talked. Cousin, do you have one last thing to say?
Yeah, I like to refer to it as the infinity squeeze for that very reason.
Yeah, it's the unknown. We're going to Andromeda. Period. Like we're the moon is the pee stop. That's the last place you get to pee before we go. So, I don't know. It's an exciting time, and I hope this kind of keeps everybody pumped up through tomorrow and getting us to Tuesday, because it's a short week, but I think it's going to be an exciting one, right? Like I said, earnings, they're boring to listen to, but go listen to it. You got to know what you're investing into. And apparently we have a new CEO, so that's going to be talking on this. So I'm curious, different vibe, maybe, hopefully. If there's nothing else that everyone else has to say, thank you everyone that came up and shared your story, shared your DDs, all the tweets and all the stuff I got to put up in the nest. Everyone on YouTube, you guys have been great. I've been enjoying your little side conversation over here. Just talking about like recycling is the best way to make money. Yes, recycle. Go and collect cans and bottles and do things like that. Go find scrap cars that you can go and scrap out and make money. There's all kinds of stuff you can do. So, other than that, I will see you guys tomorrow for Broad Market. Good night, guys.
Good night, everyone.
Good night.
Good night.
Everyone have a good night.